why homeownership today just feels so much harder than it has in the past. But I'm also going to talk through some of the more like balanced places in the country that make this feel a little more accessible than other places. As a PS, before I fully dive in, if you are hoping to buy a home within the next 3, 6, 12, 18, 24 months, and you want help on putting together a game plan, guidance, being able to figure out like what this would realistically look like based on where you live, I have lots of options. Link on my profile. You can run numbers. I can dive in with you, right? Like you kind of pick your path. So just to kind of kick us off there. Okay, so I say this all the time. A lot of people want to demonize the interest rates, and that obviously plays a part, right? But the real problem that we have right now is that historically, the core problem is that prices have officially like outrun income in this scenario. So what I mean by that, so right, like today, the average home price is 4.7 times the income for the household. So historically, it's sat closer to about 3 times, right, the income. In many markets today, it actually pushes 5 to 8 times. So people like haven't suddenly become really terrible at budgeting. Homes are just quite frankly way more expensive. Like they literally cost way more today than what people earn. Today, many buyers are spending between 25 and 35% of their income on housing alone, and especially in major cities, that can really go all the way to like the 40% amount. And they determine that cost burden homeowners are actually spending about 30% of their income on their housing payment. So this is why, buyers feel stuck. The payment feels uncomfortable. It's just the fact that, well, first of all, home prices, it's like that's the biggest contributing factor. Like genuinely, it's the biggest factor. But then you add in rates are obviously higher than the COVID era, which was between 2 and 3%. And then in addition to that, we are looking at higher insurance and taxes. So when you add all those three together, it can just be a little bit rough. Now, with that said, there are definitely some states that just make it a wee painful. There are places where it is just, and I would even say it's not even the entire state. Sometimes it's like specifically metros that are like, if you live in a top 10 city, I mean, it could be well beyond the 5 to 8% of your income range. But I want to talk through a few states. So I'm licensed all over the country. We get states added every single week for my team. So, I see these numbers every day. I run numbers for people every day. But I wanted to kind of talk through a couple states that definitely feel a little bit more achievable in comparison to others. So first off, North Carolina, actually like cities like Raleigh and Charlotte, I did a whole video on NC last night. But so right now, most people in these areas spend between 23 and 24% of their income for housing. So this is below that 30% threshold that we honestly kind of want to stay within. The reason why is that just North Carolina as a whole, there's a really strong income growth sector here between tech and finance. There's a lot of healthcare as well. So there's just a lot of opportunity in like the major cities in North Carolina. And the home prices have not been impacted in the same way that some of the more expensive cities in the country have seen. So it's actually deemed as one of the best realistic first-time homebuyer states still on the map. Next up, so for Texas, Dallas and Austin, most people in these places are spending about 25% of their income on housing. Again, that's within that kind of healthy limit. They're not going over the 30%. Why this works, the state has no income tax. Also, too, incomes in these areas tend to offset the home prices. Property taxes here, y'all, though, are a real bitch. Like, just gonna say it. Like, if you compare North Carolina to Texas for property taxes, wildly different. But Texas home prices tend to be less than North Carolina home prices. So it's a little bit of a wash. Virginia is another one. And here's like an interesting thing too. So Virginia Beach, specifically the area, most people here spend between 22 and 23% of their income on the home price. Why this works and why this happens, most of the consistent employment around this area is based on military and government. So one thing you will notice, I'm from a little town, born and raised, and called Jacksonville, North Carolina. And it's a military town, huge military town. A lot of the time, if you live in or around a major military town, you will not see the home prices take off in the same way that you see home prices take off in more of like a tech or finance town. And it's because when military members are essentially paid a specific amount of money every month for their housing pay, that actually creates a natural cap on the housing market in those places. And often they're not they're not often a place where a lot of people migrate to. So if just as a hint, if you live in or around a military town, you are often sheltered a little bit more than if you were to live in a big city where tech, finance, and healthcare are the big industries. So like in comparison, like Northern Virginia, way different story. Like home prices there totally took off. Whereas like Virginia Beach in particular, that is a still very like affordable place for most first time home buyers to purchase. In Florida, so Jacksonville, about most people here spend about 25% of their income on housing. Migration here did drive a boom really quickly, but we are seeing a lot of the market here cool down. So we're seeing prices either stay flat or even drop. Insurance did go pretty like crazy here. But the reality is that, again, like the home prices in this area do tend to, again, like 25% of income is what most people are spending on homes. Now, y'all, obviously, these are like statistics, and you could, there's certain pockets where this is not the case, but this is like data that is like currently available. Now, I'm going to read some flip sides here. Okay, so some places where people struggle to buy. So obviously, if you could imagine, California, price to income ratio here is 8 times. Most home prices are 8 times what the average or the area median income is, which is pretty nuts. Some cities, I even said that some cities 10 to 12 times the income. So it is one of the hardest states to buy in, period. Like it just is. Washington, so overall, still tight, but Seattle showing that 24% of income is typically used towards housing. Really high incomes here, but it is still expensive. A lot of tech salaries drive the home, like the housing market on like the higher end. Now, I always talk about this. So Jersey, y'all, for everyone living in Jersey, I got your back. I love you. I help people there all the time, but whoo, y'all's property taxes are wild, like wild. So the median home price here is around mid 500s is like what we're looking at. But the crazy thing about Jersey are the taxes. I've had clients where, I actually had a client literally this week. We were running numbers. They live in Jersey. They work remote though. They're looking between Jersey. And then we were looking at this town in South Carolina that her friend lived in. The monthly payment difference was $750 a month for the same home purchase price. So thing about Jersey is that there are strong incomes here, and a lot of the time the principal and interest, so just the home price and the interest rate, not the problem, but the property taxes can definitely just make it be, it will genuinely change what home price you're looking at based on the property taxes of the city that you're looking in. So when it comes to buying a home, we just are in a different, I say this all the time, like truly today, homeownership is not about saving money. It's not about like it being a practical decision, which it can be depending on like your family size, et cetera, like where you want to live. But it more is like a change of pace. Like it's like a lifestyle change, a lifestyle choice that you are making. And it is not one that you're doing to like it used to be that you bought something to save money because renting was more expensive. It's not really true. You do typically pay some kind of premium for rent because you're not dealing with any of like the hassle of maintenance, et cetera. But the reality is like a lot of people buy a home today because they want to control where they live. Like we bought our house because I like the neighborhood. Like I want to live in this neighborhood. I like this specific home. I like this specific layout. I want to paint it, whatever I want to paint, I want to do those things. It definitely was like, could we have found somebody else's home to rent for cheaper? Yeah, like definitely. But also, let's say that homeowner wants to sell their home. I don't want to be inconvenienced by somebody else's plans. Obviously, we're a family, so that doesn't also work for like our lifestyle desires, right? But we have that privilege of that being a thing. But truthfully, homeownership today is more about like people wanting to. They're making a lifestyle change, a lifestyle decision based on desire, not based on like practicality on paper. I work with clients every day. We make it make sense, right? Like we make sure that they're making a financial choice that they can afford and that they're excited about, but it's not typically for them to save money. So something just to consider if you're a first time home buyer, and especially if you can work remote. So the reality, y'all, is just that we are in a different time than we were 5 or 6 years ago. I'm always here to help. Link in my profile to make a free account to start planning, and I'll see you guys soon.